In recent years, more and more taxpayers are facing balances due on their tax returns instead of the refunds they've traditionally had. In part, this is because of recent changes to the withholding tables in Form W-4 that have created some confusion on behalf of taxpayers. This video seeks to clear up some of that confusion so that your tax withholding more closely matches your actual tax liability. I'm the Tax Geek, and here is how to fill out your W-4 oversimplified. As a result of the Tax Cuts and Jobs Act, which took effect in 2018, significant changes were made to Form W-4, which is the form you fill out to tell your employer how much federal income tax to withhold from your pay. The old system of withholding allowances was scrapped, and a new system was devised with the goal of getting most taxpayers' withholding as close as possible to their actual tax liabilities, without creating huge tax refunds or large balances due. As with any major change, this new form has created its usual share of confusion amongst taxpayers. Even tax professionals who have been used to the old system have had to accustom themselves to the new system in order to properly advise their clients. We're going to use this traditional paper W-4 to explain how the form works, but most companies have an online system where you can enter the same information from the form to arrive at the correct withholding. To establish or change your withholding, you must either fill out and sign the paper form, or you must complete your company's online procedure. Simply informing your employer you want more or less tax taken out of your pay is not sufficient. You start by filling out the top part of the form with your name, address, and social security number. Next, you check the box for your anticipated filing status. If you're unsure of your filing status, you can watch my video on filing status by clicking the card above or the link in the video description. This creates a base amount of withholding, which when added up at the end of the year, should closely match your tax liability. At this point, if you have one job, or no or minimal other income, or have no children or other dependents, stop. Sign the form at the bottom and hand it back to your employer. The appropriate amount of taxes will be withheld from your pay. If you have two jobs, are married and your spouse works, or have additional sources of income where taxes aren't withheld, a little more work is necessary. If there are only two jobs total for either you or you and your spouse, with the lower paying job close in amount to the higher paying job, or you have moderate amounts of additional income not subject to withholding, or your pay fluctuates because of commissions or bonuses, checking the box in Step 2, line C will tell your employer to withhold more than the base amount. Check this box for each job. Taking a look at this withholding chart from IRS Publication 15T, you can see that significantly more is withheld each pay period if you check box 2C. If you have two jobs, or are married and your spouse works, and there is a significant difference between the incomes from each job, you should consult this chart, which is in the instructions for the form. For your filing status, you compare the higher paying job to the lower paying job, and where the two intersect, you'll find the amount of additional withholding needed to overcome the disparity between the two jobs and not result in a balance due. This additional withholding is then divided by the number of pay periods of the higher earning job, and the result is entered on line 4C of the W-4 form of the higher paying job as additional withholding. Here are some examples. Eric is single and works full-time at a job that pays about $60,000 per year. He also has a part-time weekend job that pays $15,000 per year. He consults the chart and sees that he would need to have an additional $3,510 per year withheld from his pay to avoid having a balance due. He is paid 26 times per year, so on line 4C of the W-4 for his full-time job, he puts $3,510 divided by 26, or $135, and that additional amount will be withheld from each paycheck from his full-time job. For his part-time job, he simply indicates he is single and signs the form. Robert and Annie are married and both work full-time. Robert makes $35,000 per year and Annie $125,000 per year. Consulting the chart, they see that they would need an additional $7,210 in withholding to avoid a balance due. Annie is paid 26 times per year, so Annie enters $277 in additional withholding on line 4C. Robert simply indicates his marital status and signs and submits the form. If you have children or other dependents and your total income is less than $200,000 per year or $400,000 per year if married and filing jointly, filling out the Step 3 section of the form will reduce your withholding to compensate for these credits. To complete this step, multiply the number of your children under age 17 by $2,000 and the number of other dependents by $500 and enter the result on line 3. For example, Ginny files as head of household and works at one full-time job with a $55,000 annual salary. She has 2 children under the age of 17 and claims her mother, who has no income and whom Ginny supports, as a dependent. She multiplies 2 times $2,000 and adds $500 and enters the result on line 3. It is extremely important that married couples make this adjustment only on the W-4 for the higher earning spouse. Single persons with 2 jobs should only make the adjustment on the higher paying job. Making this adjustment to both W-4s will result in substantial underwithholding and potentially result in a large balance due. If you had no tax liability in the previous year and anticipate no tax liability in the current year, you may claim exemption from withholding. To do this, write the word exempt in the space under line 4C of the form. Allison files as head of household, makes $24,000 per year, and has 2 children under 17. She never has any tax liability and usually receives a substantial earned income credit every year. She claims exemption from withholding to give herself a little more in each weekly paycheck. Willie is 17 and expects to make $3,500 at a part-time job. He would have no tax liability, so he claims exemption from withholding to avoid the hassle of filing an income tax return for what would be a small refund. Your withholding preferences will remain the same until you change them, except for exempt status, which must be renewed every year. Smart taxpayers review their W-4 forms annually, making adjustments for marital status, anticipated additional income, and family size as needed. It is very important once you submitted changes to your W-4 form to check your withholding on the next paycheck. Your employer is responsible for withholding tax according to your W-4, but ultimately, you are equally responsible to check that your withholding is correct. That covers the basics of filling out a W-4 form. If you have a more complex situation involving extra income, self-employment, investments, or credits and deductions, using the IRS's W-4 app at www.irs.gov/W4 app is the best tool for assuring you have the correct amount of tax withheld from your pay and avoid an ugly surprise when you fill out your tax return. Additional information and resources can always be found in the video description. Please like and subscribe if you found this video informative and share it with anyone who would find it useful. Your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of Your Taxes Oversimplified.